Welcome to the Sell House Fast for Cash YouTube channel. Please hit the subscribe button so you don't miss our latest videos. If you can click the like button, that would be great. Our subject is, what is the UK house price predictions for the next 5 years? The UK housing market has experienced significant fluctuations in recent years, driven by economic factors, governmental policies, and changing demographic trends. As we move forward, it is crucial to analyze the key indicators shaping the market's trajectory over the next 5 years. Understanding these factors will provide prospective homeowners, investors, and policymakers valuable insights. Interest rates play a pivotal role in determining mortgage affordability and influencing housing demand. The Bank of England's monetary policy decisions directly affect borrowing costs, with current indications suggesting a cautious approach to rate hikes to manage inflation. We can anticipate a steady impact on housing demand. Rising inflation erodes purchasing power, affecting household budgets and savings. The interaction between inflation rates and wage growth will be a critical determinant of housing affordability. A sustained period of high inflation without commensurate wage increases could dampen demand for homes, exerting downward pressure on prices. A robust economy with high employment rates generally supports a healthy housing market. Conversely, economic slowdowns or recessions can reduce consumer confidence and lower housing demand. Monitoring GDP growth and employment trends will be essential in predicting future house price movements. The UK's population growth drives housing demand, particularly in urban areas. London, Manchester, and Birmingham continue attracting domestic and international migrants. This urbanization trend is expected to persist, sustaining demand for housing in metropolitan regions. Government initiatives to increase housing supply, such as the Affordable Homes Program and planning reforms, will significantly impact house prices. Effective implementation of these policies could alleviate supply shortages, stabilizing prices in the long term. Changes in property taxation, such as stamp duty adjustments and capital gains tax reforms, directly influence the housing market. Additionally, regulatory measures to enhance tenant protections and rental market stability will shape investment decisions and housing availability. London's housing market, characterized by high prices and strong demand, often sets the tone for national trends. However, affordability challenges may temper future price growth. The South East, benefiting from its proximity to London, is likely to see continued demand and moderate price increases. The Northern Powerhouse Initiative aims to boost economic growth in cities like Manchester, Liverpool, and Leeds. Improved infrastructure and investment in these regions are expected to drive housing demand. The Midlands, with its growing economy, also presents opportunities for steady house price growth. Regional economic conditions and specific housing policies influence house prices in Scotland, Wales, and Northern Ireland. While these regions may not experience the same price pressures as London, localized demand and supply factors will create diverse market dynamics. In the short term, house prices are expected to experience moderate growth, supported by low interest rates and ongoing government initiatives. However, economic uncertainties and inflationary pressures may introduce volatility. Over the next 3 to 5 years, house prices are projected to grow steadily, driven by sustained demand in urban areas and effective housing policies. Regional variations will persist, with some areas experiencing higher growth due to economic development initiatives. The long-term sustainability of house price growth will depend on a balanced approach to managing economic, demographic, and policy-related factors. Ensuring an adequate supply of affordable housing and addressing inflationary pressures will be critical to maintaining market stability. Investors seeking to capitalize on the UK's housing market need to identify regions with strong growth potential. Urban regeneration projects, improved transport links, and economic development initiatives often signal areas poised for appreciation. Cities involved in the Northern Powerhouse Initiative, such as Manchester and Leeds, present significant investment opportunities due to ongoing infrastructural enhancements and job creation. The rise of property technology, PropTech, is transforming the housing market. Innovations such as virtual property tours, blockchain-based transaction platforms, and AI-driven market analysis tools enhance buyers, sellers, and investors. transparency, efficiency, and decision-making. Embracing these technologies can provide a competitive edge in the evolving market landscape. Sustainability is becoming a key focus in the housing sector. Eco-friendly building practices, energy-efficient homes, and sustainable urban planning are increasingly in demand. Government incentives for green building initiatives and consumer preferences for environmentally responsible housing options are driving this trend. Developers and investors who prioritize sustainability can tap into a growing market segment. Brexit continues to influence the UK's housing market. The departure from the European Union has led to changes in immigration patterns, trade relations, and economic policies, all of which impact housing demand and prices. While some regions may face challenges due to reduced EU immigration, others could benefit from new trade agreements and economic policies to boost domestic growth.